When interest rates are high, you might be wondering as a buyer if you can assume the existing mortgage on a home that likely has a lower interest rate. We're in an interesting market right now where interest rates have changed drastically over the last year to year and a half, and home sellers could have a loan that you may be able to assume. So there's a few things you need to know about this. One, it does not depend on who the lender is. It depends on what type of loan exists on the home. So conventional loans are not assumable, but FHA, VA, and USDA loans are. So what you need to know about this is if you're going to assume the loan, you're likely going to be assuming the rate, and you will also assume the existing time that's left on the loan. So for example, if the homeowner has had the loan for 3 years, then there's 27 years left on the loan if it's a 30-year loan, and then you would take over the remaining 27 years. So you take over the rate and you take over the remaining term. There are some fees to doing this. There's some assumption fees and title, credit report, escrow. Usually the fees are a little bit lower, but this will be determined with the lender that owns the current mortgage. You will need to work with the lender that has that mortgage on the home. You cannot choose your own lender. So if you're pre-approved by a lender right now, and then you find a home and you want to assume that loan, you're going to have to switch lenders and use the lender that is servicing that loan. Another thing to keep in mind is that you're only assuming the balance of the loan. You cannot increase the loan amount to cover to match up with what the purchase price plus what your desired down payment is. So let's say the home was selling for $500,000 and there was $350,000 left on that mortgage. You would be responsible for $150,000 to make up the difference between the mortgage that's existing and the purchase price on that house. So the answer is yes, you might be able to assume the loan. You will have to qualify with your own credit and your income verification. And you will need to come up with the difference between the loan amount and the purchase price. But it's worth checking into because you may be able to get a great rate from 2020 or 2021 that is just not available right now. So if you have any questions on this, please let me know.